Hello guys, in this video we are going to see about Nifty and Sensex that appear in your daily newspaper, but most of us don't even know the meaning for it. So what is it and how is it going to help us in our career? To know about it, stay tuned. In order to know about Nifty and Sensex, we need to know about the stock exchanges in India. There are a lot of stock exchanges in India, but there are two main big players. Those are NSE, that is National Stock Exchange, and Bombay Stock Exchange, BSE. BSE has around 6,000 companies listed in their exchange, whereas NSE has around 2,000 companies listed in their exchange. What does listed mean? Listed means you can buy and sell the company's shares in the respective exchange. So Nifty and Sensex are index of NSE and BSE. In order to understand what index is, let us assume a scenario that you are in a vegetable shop and you want to buy some vegetables. Before buying them, I hope that you will check for the quality by checking one or two vegetables. Likewise, we have Nifty and Sensex as a representational figure of stock exchanges. National Stock Exchange 50 is abbreviated as Nifty, is a list of 50 best performing companies in every sector in the National Stock Exchange. Whereas sensitive index, that is Sensex, is a list of 30 top companies in every sector in BSE, that is automobile sector, IT sector, every sector, pharma sector, every sector is taken into consideration. But remember that the selection criteria is very strict and often the index is rebalanced. That is, the best performing companies are added and the companies that don't perform well were removed. So here you can see the Nifty and Sensex charts which show a clear uptrend over the long period of time. I accept that there are some downtrends here and there, but even after many people who ran out of the country without paying their debts, after many scams that were exposed and many other natural disasters, there was always sunshine in the market. So I would argue to anyone and say that India grows at night. If it has best government, it will have a better growth. If it has a worse government, it will have a lower growth. But in both cases, growth will be there. So you guys may ask, my country grows, what is in there for me? So let's take a look at common investments in India. First of all, fixed deposit, lower risk but lower returns, that is around 4% return every year. Then the common practice, that is real estate, it always oscillates but averages around 5% return every year. Then gold, it gives around 10% annual return. And we have our Sensex and Nifty at 17%. Although it oscillates, it gives 17%, that is 1/7. Can you imagine? It has high risk but compound annual growth rate is around 17% for Sensex and Nifty. So let me give you an idea today and listen to it very carefully. Let us all take around 10,000 out of our yearly budget. That is not so hard. All it takes is 1,000 rupees per month out of our budget and buy single lot of Nifty for next 25 years. You will for sure have 50 lakhs after 25 years, and let's say if you are still young and can invest for next 30 years, you will have 1 crore rupees. Whatever you may say, it is a big money for me to live off. These are all for people who blindly invest. But if you start mastering the technical and fundamental analysis skills of stock market, the sky is the limit. So the takeaway from this video is starting early is a big advantage. So start right now. Learning the technicals and fundamentals can return you unimaginable growth. So take action right now. And I hope that you have already taken one step towards the mountain before. So let's climb this together. If you want to know about technical and fundamental analysis, click right here. And lastly, click the subscribe button if you have enjoyed my content. And ring that bell icon to get notified every time I post a new video.